during which the customer does not have the right to use the of the asset. In the given case, the period of use consists of non-consecutive days. As a club can use the auditorium for every Saturday and Sunday over a 5-year contract period. The use of the same auditorium by the owner during the remaining days of a week throughout the 5-year period does not prevent the contract from being a lease. So there is no requirement under the standard that the lease term should be a continuous calendar terms, right? It can be, you know, 5th day of a week or a Saturday, Sunday. That kind of an arrangement is also a lease term. Many a times you would see these corporates, many companies or many corporates own helicopters, right, for the use of its promoters, etc. And many a times these helicopters are jointly owned. 3-4 different groups would have that. So how the arrangement is structured also needs to be seen, whether it's 1/4 of the calendar day or calendar year that they have used to, or how they have actually determined the use, that is also to be seen. So in those cases, it's not necessary that, you know, for a continuous period of patch of time, it is, the exclusive right is to use is there. It can be for certain days, which may not be on a continuous basis. Yes, yes, Percy.
This helicopter example that you gave.
Yeah.
I'm owning aircrafts and helicopters. I'm entering into a lease contract specifying the model number and
Okay.
the make of that aircraft.
Okay.
With a certain leasing company stating that it will be available to you on throughout the month.
Okay.
For a minimum of 2 hours for 2 days in a week, and at your option for the remaining of the month.
Uh,
That
so,
same
so
lease and for that same helicopter, same model make, I enter into another agreement with another corporate saying that I'll make it available to you whenever you want for a minimum of 2 days and at your disposal as and when you want. So would it be an identifiable asset for both these corporates?
So I am owning an aircraft. I enter into an agreement with, let's say, company A to make this aircraft available for 2 days of a week.
Let's say whenever he wants it, whenever that corporate wants it. Let's not say 2 days, whenever it wants it.
And whenever he wants it, but for a minimum period of, is there a guaranteed period or?
No guaranteed period.
Okay.
The lease rates are specified.
Okay, in that case there will be no lease term because Percy, because there is no determined term. Okay, this is like, you know, a kind of an executive contract or a kind of a MOU kind of a thing that I have given you. It's like an offer letter, right? So I have given you an offer to use my aircraft at a lease rental of so and so per day. But until you have exercised an option that I want it for a 1-year period or whatever number of days or whatever, it has not translated into a lease agreement. And just to come back to your example, the same aircraft you have given to another company, company B, for a determined number of days in a week, is it?
Yes. No, so I changed the facts.
Okay.
Company A, I'm specifying the number of days.
Okay. Okay.
Company B also I'm specifying the number of days, same number of days.
Okay.
Provided company A doesn't use that aircraft.
Acha. So subject to it being available, in short. In that case, again, if there is a minimum guaranteed number of days for either for each or for both, in that case, it would take the color of a lease. Of course, if it's a short term or long term, you will have to see. If it's less than 12 months,
It's for more than
1 year. In that case, it will be both agreements will be a lease. Now, from a lessor's point of view, you are the lessor, right here.
I'm asking from a lessee's, first from a lessee's point of view.
Lessee's point of view, see both these guys, both these A and B in your example, if they have identified asset is there because the number etc. it has been mentioned. The number of days is also affixed. Minimum number of days is there. The rental is also there. In that case, there is a lease for both. They will measure it both on different terms. So, jitna bhi din I have committed to use that aircraft, I will set up my ROU asset and my lease liability basis that. So, but the asset, the aircraft will be in the balance sheet of the lessor company. Okay, and again, whether it's a operating lease or a finance lease will need to be evaluated by the lessor. I may have multiple leases for lessees for one asset. That is not
Yeah. So it's in the nature of an operating lease for a lessor.
Hmm.
For lessees, they both will recognize it as ROU asset and set up a liability.
Yes, basis the number of days that they have committed.
Minimum number of.
Yes, yes. And in the basis of conclusion, it is envisaged that there can be double counting sometimes, that you may have the lessor has its the asset, the main asset, the underlying asset in its balance sheet. The lessee in turn also has a ROU asset. So it can be like, the right to use it can sit in a different balance sheet, whereas the legal owner will have the asset in its own balance sheet. So that disconnect is thought through in the basis, in the lead up to this the standard basis of conclusion. Yes, please.
Now there is a standard says that the asset has to be physically identified.
Yeah.
The previous example, does it the requirement is that the time or period of usage also has to be specifically identified?
In this exam case study 10.
The Saturday Sunday has a greater importance, or it can be like the booking is such that for a period of 5 years, 2 days on exclusivity will then it
The way it is defined, it's not hard coded ke वैसा ही चाहिए. It need not be continuous. It can be specific. Yes.
can take any 2 days of the week
Yes.
and the auditorium has to service it.
Yes. So for example, if I have, let's say, a hotel property, and I come up with this Club Mahindra kind of a scheme that I am giving you room nights, okay, where you can use it for 8 days for next 25 years, okay, any 8 days, but मेरे पास एक ही property है. Let's say, for example, a hypothetical example, customer बार बार क्यों आना चाहेगा वो एक अलग चीज़ है. So in that case, it would take the nature of a lease, because for any 8 days for next 25 years, you have a right to occupy my, let's say, one room in my hotel. But if I have, as in case of Club Mahindra, it has like several properties, right? So in that case, there is no identifiability. In that case, it will not be a leasing arrangement.
So like an auditorium, the study circle which I would have 100 or 200 sessions in a year. 100 I will have example. So that's an identified asset and the usage was also defined. Even if I don't use, I have to pay for it.
Yes,
Then it would be
yes, yes.
so
Yes, please.
in the example which you cited about
Auditorium.
not the auditorium, Club Mahindra,
Huh.
instead of having one property, you have a pool of property.
Yes.
Still,
It will not be a lease in that case. Yeah, yeah. Because then in that case, there's no identifiability to the asset. Because it can be from a fleet, like that vehicle example, truck example, के I have hundreds of trucks and आपको सिर्फ 10 दिया है या 5 दिया है, then substitution right is there. But if it is just one, hypothetically, फिर ऐसा कोई करेगा नहीं. But let's say, for example, if it's just one property, then it becomes a lease.
sir,
Yes, please.
sir, can identified asset be shared between 2 or 3 entities who have made an agreement to occupy the entire identified asset?
Yes, I can have multiple lessees, and I can have in so many a times within the group structure, group entities में अक्सर ऐसा भी होता है कि multiple companies are acting as lessees. So it may be occupied by company A or any group companies of company A. That is also possible. There is no restriction with respect to that.
So how will we account for that? If say for a group, they have 2 entities A and B.
Huh.
They are occupying a
Okay.
and using it for their purpose and
Huh.
sign an agreement in between them. So how will they account it? So
Who is the within A and B, which company has the obligation to pay the lease payments?
they are sharing it among them, like 50-50% in the ratio of
So in this, that will get split. 50% ROU split हो जाएगा lease liability. Many a times what happens, the obligating company is one, and as a group there is a guarantee. Okay, if he fails, then you may call upon somebody else to make that payment. In that case, the obligating company will be the lessee. He will have to account for the lease liability and the ROU asset. The guarantor will get into IND AS 109 accounting or IND AS 104 accounting of financial guarantees. What time do we break for tea? Should we? I am actually left with a few more case studies. Should we take now and then resume back? Okay, so in that case, we can break for tea and then gather back in 10-15 minutes. Yeah, thank you.
Welcome back from our short tea break. So we'll continue with the session of Sir. Over to you, sir.
Okay, welcome back. We'll continue with our case studies. We have about 3-4 more case studies on 116, and then we'll quickly have a last session on common errors. What time do we have to close the session? Is it till 6 or 5:30? 5:30, okay. Okay. Yeah. So in the given case, X directs how and for what purpose the air conditioning plant is used by specifying the hours of the operation and floor on the operation is required, when, whether, how much output is produced, and the temperature to be maintained by the air conditioner, how much output is produced. Although Y has right to operate and maintain the plant, and these rights are essential for the efficient use of the plant, as stated in paragraph B27. These are not rights to direct how and for what purpose the asset or the air conditioning plant is used. Hence, the entity X has the right to direct the use of the air conditioning plant, as it has the right to make the decisions about the use of the air conditioning plant during the period of contract. Oh, sorry. So I think we'll move on to the next one. Many a times these arrangements are within the group, right? So let's see a group scenario. X, that is the customer, enters into an arrangement for a period of 5 years with Y, that is the supplier, for the right to store its gas in a specified storage tank that has no separate compartments. At the inception of the contract, X has storage rights that permit use of 60% capacity of the storage tank throughout the term of the contract. Z, a subsidiary of X, has an arrangement with Y, that is the same vendor, to use balance 40% capacity of that same storage tank throughout the term of the contract. Whether there is an identified asset and whether the arrangement would be a lease in respect of the standalone financial statements of X and Z, and in the consolidated statements or financial statements of X, will the answer be different if Z is an associate or JV of X and not a subsidiary? So it's a bit similar to what we earlier took, one example, 60%, but the remaining 40%, there is no ROFR or anything. There is another company which is the subsidiary of X who is the customer for that. And the question is whether you look at this substitution right per se from a group of customers perspective or from an individual customer's perspective. You disregard the fact that they are related parties or group companies. Very bright idea, right? This scenario of escaping 116. So, क्या लगता है आपको? If the capacity portion of an identified asset is not physically distinct but represents substantially all of the capacity of the asset, it is an identified asset. From the perspective of the standalone financials of X and Z, there is not an identified asset since the capacity portion is not physically distinct, and neither entity X nor entity Z on a standalone basis has the right to use substantially all of the capacity of the asset. However, from the perspective of the consolidated financial statements, the reporting entity is the group comprising of X and Y. A reporting entity, that is the group, has the right to use substantially all of the capacity of assets. Hence, there is an identified asset and the arrangement would be considered as a lease from of the specified storage tanks. If entity Z is not a subsidiary of Z but associate or JV, then the accounting will, along with the lines in the accounting of the standalone financial statements, X, since an associate or a JV is not included in the definition of a group, the group comprises of parent and subsidiaries only. The reporting entity here is X, which does not have the right to substantially use all of the capacity of the asset. So a plain vanilla analysis that individually X and Y, although they are subsidiary and parent, you don't consider that it is one from a standalone perspective, but from the consolidated perspective, however, you need to understand that because they are part of the same group, at a consolidated level you need to account for it as an identified asset and a lease from the group perspective. Yeah, this is an example that I've picked up from the Institute's educational material on 116. So it can also be a idea to wriggle out of lease in some cases, right? Let's take a couple of scenarios in this case study. A lease has a contract of 5 years but can be terminated anytime after the end of the 3rd year at the option of the lessor or lessee without incurring any significant penalty. Second scenario, a lease has initial contract period of 5 years but can be terminated by the lessee any time after the end of 3rd year without requiring lessee's consent. Question is, what is the lease term in either of these scenarios? In first scenario, what is the lease term? 3 years, because subsequent to that, there is an option of the lessor, right? So the lessor can kick out the lessee. So the lessee cannot assess what is not in his control. So it's 3 years. Second scenario. Second scenario, it's also 3 years, right? Okay. The answer is right, so I'm not getting into reading the technical this thing. Let's look at this perpetual lease agreement example. Airline X, that is the lessee, has entered into a lease arrangement with entity Y, that is lessor, to take an aircraft on lease for which it pays monthly rental to entity Y. There are no termination clauses for the contract except in case of default or rental payment by the lessee. In this case, what is the lease term? There is no term that is ascribed in the agreement. So does that make it a perpetual lease? And if so, till what time you should calculate, estimate the lease liability for the purpose of lease liability calculation? At till what time you should extrapolate the lease term? Yes, Percy. Economic life of the asset. Okay. Anybody else? Everybody agrees with Percy. Let's see the answer. IND AS 116 defines lease term as follows: the non-cancelable period for which a lessee has the right to use an underlying asset together with both periods covered by an option to extend the lease if the lease is reasonably certain to exercise, if the lessee is reasonably certain to exercise that option, and periods covered by an option to terminate the lease if the lessee is reasonably certain not to exercise that option. In the given case, since there is no defined term of period of time and no termination clause, the non-cancelable period for the lease can be said to be till perpetuity, since lessee has the enforceable contractual right to use the underlying asset till perpetuity for exchange of consideration. In this case, the lease term should be taken as the remaining economic life of the underlying asset, that is the aircraft, except if there are any legal and other economic factors due to which entity would be not able to use the asset for the entire remaining economic life. So you are right, it is the economic life, unless you assess that you will not be able to use it for the entire economic life of the asset. So before we move on to the next section, that is the common errors in IND AS financial statements, happy to take any further questions with respect to the standard or any case studies or anything else also with respect to leases. Yes, please. So if I take an asset on lease and give it to someone else on a sublease basis, part of it on a sublease basis. So again, whether the sublease is a lease or not, in a group company scenario, that has to be assessed and analyzed. The same criterion would be applicable, that is whether there's an identified asset, substitution right, all those things would be applicable for that sublease also. Many a times in a group scenario, it may not be necessary that those criteria are met. For example, if I am taking an office premises on lease as a company, and within the group I am allocating various areas to various companies, group companies. So in that case, if the arrangement between the group companies is very hard coded, identifiable asset is there, etc., then in that case, yes, then you will have a sublease. You will, as a lessor, as a sublessor, you will have certain, you may have a gain in that scenario. But oftentimes it's not very, the agreement is a one pager. It's not a very specific. Identifiability of asset is often, at least in my experience, missing in group arrangements. In that case, it may not be a lease, and in that case, you may not be in a position to call that as a lease, and therefore you may not have a, so therefore, then what happens? Then it's more of a P&L. It's an income in the P&L. Only if it's a lease, if it classifies the this thing of a lease. If it's a service agreement, then you account for the entire lease in your financials. You entirely book your interest, cost and depreciation, and whatever sublease money income you get, that goes as a part of your P&L income, as a revenue, as a other income, whatever. Yes, please. Huh. Yes. So let's say if I have given security deposit of say 10 lakhs and I discount it as per the requirements, and the present value of that is, let's say, 8 lakhs. So the spare 2 lakhs that gets debited to ROU asset, and over a period of time it gets depreciated along with the main ROU asset. The 8 lakh deposit becomes if I'm a lessee, right? So there is a financial liability, financial asset. Financial asset pay I accrue interest, and there's a notional interest income. Eventually it will come to 10 lakhs, but I will have a P&L income in the form of interest income, notional basis, and then depreciation of this 2 lakh which on day one I had captured as a part of ROU asset. That's correct. Okay. Okay. Period of 10 years, because the security deposit was given on day one, and you will get it back at the end of 10th year. So for discounting of security deposits, you will still consider 10 years. But because your lease commencement date is after the 3rd year, right, you will in that case also set up the ROU asset on day one itself. Okay, but आपका lease liability NPV calculation में you will plot the rental cash flows after the third year. So you may get a different value, but ROU asset and therefore depreciation hit in the P&L will start from the first year itself. इसके ऊपर deposit के ऊपर आपको interest income आएगा because you have considered it as a 10-year period and you have already paid the deposit. So वो P&L में income और खर्चा आना first year से ही चालू हो जाएगा. Although practically your payouts happen at the later date, third year. Yeah. Yes. Yes, exactly. So first initial, so in his case, first 3 years are rent-free period in a sense. So that should be considered. You are right. Yes, please. ROU will be still there because you have a right to occupy that land. You will not have lease liability. I'm sorry, last part I didn't. हाँ. नहीं, आपने upfront दे दिया ना. Yeah, so at the time of signing the lease agreement with MIDC, you have paid an upfront. So agreement asks you to pay an upfront lease premium. So on the day you sign the agreement, you may have prepaid it, but there is an obligation to pay to MIDC. So वहाँ से आपका पूरा ROU asset आ गया. Future you don't have any lease liability. So this ROU asset will keep getting amortized over the period. So but you will not have a lease liability because you have paid upfront the entire this thing. Yes, yes. So under earlier gap, if you have classified it as fixed asset, you will have to reclassify it as ROU ideally from the Schedule 3 perspective. Yes. So if you have a building which is, or you have constructed, that will be a building. It will be a fixed asset. That's correct. PPE. Yes. Yes, Percy. So no, answer is no, because so ek to there is a institute's ITFG with respect to that. Yeah, and secondly, because see, you don't have anything which is, you don't have a rental cost at all, right? Percy, in this scheme of accounting in IND AS 116, the way it works is that you have interest cost and you have depreciation. Neither of which you can prepay actually, right? So prepaid rent wouldn't be correct. It has to be technically debited to ROU asset and amortized over a period of time. Practically, if the amount is not very significant or material, companies do tend to take a materiality call के इतना ज़्यादा बड़ा amount नहीं है तो उसमें रहने दो. That is a different consideration. But technically the answer is it has to be definitely as a part of ROU asset because you don't have anything else. There is nothing like a rental cost. So where's the question of prepaid rental? It is a consideration for the right of use asset. Na? So the 2 lakhs per debit that you get, Percy, is nothing but the interest that you are losing out over a period of time on the deposit. It's a cost, right? Now you have incurred the cost to acquire the right to use that asset. So it's an incidental cost to the getting the right of use of asset from the lessor. So by that logic, it becomes part of the ROU asset. Yes, yes. Yes, yes, yes. It will, yeah. No, see, eventually the entire lease accounting is P&L neutral, because as I said earlier, cumulatively over the entire lease term, आप सिंपल कीजिए रेंट का खर्चा दिखाइए या ये ROU वगैरह दिखा के ये सब जैस कीजिए, but it will be P&L neutral anyways. But it is measurement and presentation and disclosure also, but it is a different scheme of accounting. I won't say that it's only disclosure, but it's a different accounting concept altogether from a IND AS 116 perspective. It's a fair value. That's correct. That's correct. Yes. Yes. Yeah. Financial asset, because you have a right to get back the money from the lessor. Still, because even if it is adjustable, it's still a form of a recovery. Even offset against your future obligation is also a right to contractual right to receive the money, and therefore within the definition of financial asset under the see, that way even the margin deposit that you give to a derivative broker is also adjustable, right? But still it qualifies as a financial asset. Yes, please. Yeah. ROU asset. Yes, ROU asset. Provided that it's ROU asset, provided the contract, the lease agreement has that specific case mentioned in the clause. We'll take a few common errors. For this session, what I have basically done, of course, we will be, we are running against time, but very quickly, 3-4 standards, key standards. I have captured the observations on IND AS financial statements. Now, I think most of you would probably know that there is a body called FRRB, or Financial Reporting Review Board of the Institute, where basically their remit is that they look into financial statements, the accounting policies, the disclosures. In fact, they not just look into financial statements, the entire director's report, including the MD&A part, the auditor's report, etc. And their job is basically to critically evaluate it. The selection, etc. is as per, there's a set parameter for that. They don't just limit their exercise to listed companies' financials. They do pick up various classes of companies, unlisted, banks, NBFCs, all kind of companies, to have a, a rounded kind of a thing. And basically then what happens is that whatever observations they have, on a one-to-one basis, they will share with the specific company, and maybe including the auditors of the specific company. And on a no-name basis, they compile a publication on observations that they have generally observed, without naming, of course, the company. If the matter is very serious, then they take it up with the company and ROC, etc., as a part of their role. So what I've done is picked up a few case, observations that we can look into for this session. And there are a couple of observations which came from NFRA also. I'm pretty sure everybody is aware of NFRA, right? So with respect to 115 and 109. We start with revenue. So again, in one of the earlier speakers talked about IND AS 115. But I think the disclosure part of it, it was a shorter session. We'll look at some of the common errors with respect to disclosures of 115, right? So observation, it was observed that the entity has not disclosed about the payment terms of the contracts with customers. Oftentimes we forget to give the payment terms. This is one of the disclosure requirements. Paragraph 119B of IND AS 115 requires that an entity shall disclose about its performance obligations in the contracts with the customers, including a description of the significant payment terms. For example, whether when the payment is typically due, whether the contract has a significant financing component, or whether the consideration amount is variable, or whether, so various aspects needs to be narratively disclosed. This is something even sometimes I find even my clients, not disclosing, but please be careful. This FRRB has specifically pointed out, and from a users of financials perspective, it's an important disclosures. Accounting policies, again, those 5 steps of IND AS 115 that one of the earlier speakers also pointed out. In terms of the accounting policies, they found that many companies are not giving adequate disclosures with respect to how the company went about disclosing the 5-step analysis. At least as a bare minimum, you should mention that these are the 5 steps, and we have looked into these 5 steps in order to establish the revenue reported during the current year. Disaggregation of revenue, again, this is a very important one. Many of the smaller companies, even in my experience, miss out on this. So the observation, it was observed that organizations fail to give appropriate disclosures as per IND AS 115 in terms of revenue disclosure and extended warranty and other adjustments. So in that, I think it was the Siemens example that one of the earlier speakers took, that there is a reconciliation. I think Percy, you mentioned contractual amount and the contract revenue and the aggregate and the recognized revenue. Again, this is one of the things, and see, in GST also you need to reconcile between your P&L and your GST amount that has been offered for GST. So again, from that perspective, that can be one of the data points, right? So this is an important thing. So whatever revenue reductions that you have done as per the requirements of IND AS 115, right? And this typically happens more so in the case of companies who follow POCM, right? Percentage of completion, revenue recognition, where you may have recognized something based on percentage of completion, but because of retention money or because of penalties or because of claims, you may not have, you may have a different reported revenue. So that reconciliation on a broad basis needs to be given as a disclosure. And yeah. Yeah.
It says specify the nature and amount of each such adjustment separately under under paragraph 126.
Yeah.
Practices are seen. No one discloses each of this variable consideration separately. It says like rebates separate, discount separate. It's just one line they reconcile it. They show it as a difference between the contracted revenue and the revenue recognized in the statement of profit and loss. But for this paragraph,
yeah, FRRB has been very clear that it has to be at a based on the nature of the adjustment. So you cannot combine everything. Example that comes in my mind is many of the pharma companies, if you look at, the reconciliation item is basically this refund, this obligation to return the goods, the right of the customer to return back the near expiry goods, or sales return, so that is one class. From recollection, I do remember on top of my mind some companies who do, a fairly good, the job of disclosing the nature. But by and large, you may be perhaps right. In the, adjustments karke ek hi line item mein many people would be combining. This is a NEFRA letter, which with respect to IND AS 115. So, if I may request you to focus on the third paragraph in the apostrophe commas, revenue is measured at the fair value of consideration received or receivable, taking into account the amount of discounts, incentives, volume rebates, and ongoing tax on sales. So this policy is grossly wrong as per the requirements of IND AS 115. It does not comply with 115. Why? Because revenue is first of all not measured at fair value, right? You all have gone through before lunch a session on 115. It is at transaction value. So when you say that it's fair value, so conceptually, or at least, so looks like in case of this company, the people who are preparing didn't read the accounting policy properly. So again, this is coming from NEFRA, it gets into a different, level of seriousness. The other thing which they had mentioned is under IND AS 115, the application of fair value is relevant only in case of non-financial consideration. The other thing that they were mentioning is that trade receivables. So again, the previous speaker talked about the difference between contract assets and trade receivables. Trade receivables is by nature a financial asset, right? So therefore, all the requirements of IND AS 109 or IND AS 107 disclosures would be applicable in case of trade receivables also. So this again is something that you need to be careful about, especially if any of your companies or your clients are under the remit of NFRA. You need to be double careful about the disclosures, including the language that is written in the accounting policies, the financial risk management, etc. So every word becomes very important from a disclosure perspective. Measurement, of course, is important, but this is also even more important. So 115 we have done. I won't, because we are running short of time, I'm taking it fast. So related party transaction, again, as we know, most of the frauds that we have seen in India are around related parties. So regulators are very, very focused and very, very fussy about the disclosures around related party transactions. Now this case, FRRB observed that the names of the related party and nature of relationship, the company had presented the following categories: non-executive director, non-executive independent directors, and KMPs. In the category KMPs, the company had disclosed the name of executive director only. From the disclosure, it can be interpreted that the company did not consider non-executive directors as KMPs. Again, under IND AS 24, the non-executive directors are also, because they have the rights that they have under Companies Act, by virtue of that, they also get into KMPs. So their names also need to be adequately disclosed. Independent directors, whether they are KMPs or not, there is a mixed practice. Many large listed companies, I see that they have taken a position, independent directors are not KMPs, but others have taken a position that they are KMPs. So again, it depends on how, how active the directors are. This is basically with respect to definition of KMPs. It was observed that in most cases, organizations fail to give appropriate disclosures of related party under IND AS 24 to enable the users of the financial statements to form a view about the effect of related party relationship on an entity. It is appropriate to disclose the related party relationship when control exists, irrespective of whether there have been transactions with related parties. So where there is a subsidiary holding company relationship, irrespective of whether actually transactions have happened or balances are outstanding, you need to make a disclosures. The same concept was there in AS 18, so that also continues in IND AS 24. So all subsidiaries, step down subsidiaries, etc. need to be disclosed regardless of whether there's a transaction with them during the current year. It was noted that in some cases the note on RPT that debentures were issued by to holding company and ultimate holding company, and the same was disclosed as transaction entered into between them during the year. However, the amount outstanding towards debentures was not disclosed, therefore the requirements have not been complied with. So again, one leg of the transaction, so what you are showing as transaction and what is shown as a outstanding balance, there is a mismatch between that. So again, be careful with respect to that. Many a times in practice, we see that related party transactions in non-listed companies, they are prepared by a very junior accountant. So oftentimes it's not reviewed appropriately. So this is something which needs adequate attention to. In few cases, in case of KMP, where the disclosure of remuneration paid to them was not made in accordance with the standards. So the standards requirement is that you give a breakup of the remuneration paid to KMPs as in this 5 categories: short-term employee benefits, post-employment benefits, gratuity, etc., other long-term benefits, termination benefits, and ESOPs, right? So this breakup, in fact, even in my observation, many companies do not give this kind of a breakup for the remuneration to KMPs. Cash and cash equivalents, IND AS 7. Company has not disclosed the amount of significant cash and cash equivalent that have not been made available for use. Even if there is no such condition or restriction in using the cash and cash equivalent, then management should explicitly disclose to be in compliance with IND AS 7. So for example, if you have a bank deposit which has been offered as a escrow for some borrowing transaction or guarantee, then you need to disclose that there is a restriction with respect to the the use of that deposit. So again, this is not something which this company seems to have disclosed. Yes, please. Yes, unrestricted. Yeah. In several cases, proceeds and repayment of term loans and current borrowings were disclosed on a net basis in the cash flow statement. Similarly, in certain cases, purchase and sale of investments in subsidiaries and sale or purchase of PPE were disclosed on a net basis. Again, with respect to gross or net presentation, the standard allows net presentation only in very limited cases. So investments, especially in voluminous cases, you cannot do a net off unless the criteria in IND AS 7 have been appropriately met. So again, this is one of the common errors that we see in practice. The company has not made the disclosure about changes in liabilities arising from financing activity, including both changes arising from cash flows and non-cash changes. Again, this disclosure was introduced, I think, about 3-4 years back. It was not forming part of IND AS 7 the way it was originally pronounced. Still, many companies do not, have not really registered that this is a requirement. So what it says is, when you have borrowings or when you have financial liabilities, you need to disclose as a note or as a as a footnote to the cash flow statement, a reconciliation between your cash and cash equivalent or your bank, your borrowings, starting from opening balances, whatever you have paid, whatever you have raised during the year. If you have an EIR adjustment, you need to say that this is on account of EIR statement adjustment. If there is a foreign exchange translation, you need to say that. And it should reconcile to the closing amount in the borrowings. So what you show as the cash flow transactions in the reconciliation should match with the figures that you have mentioned in the cash flow statements. Yeah, so in that case, generally people take a view that this is a note, it is not forming part of the main statement itself. it's a note which is given as a schedule which is given as a part of the financial statements. So since it's not a full-fledged financial statements, you need not give it for the SEBI submission. You're right. Aggregate cash and cash equivalents considered in the cash flow statement not reconciled with the cash and cash equivalent disclosed in the head of cash and bank balances in the balance sheet. Again, the use of cash and bank balances in the balance sheet itself is wrong, because Schedule 3 now requires cash and cash equivalent to be disclosed in the balance sheet also. In some cases, interest and dividend paid are disclosed together instead of disclosing them separately in cash flow statements. Again, this is something which, you cannot combine interest and dividend together, either on income side or expense side in the cash flow statement. No specific mention about dividend distribution tax, although cash flows from financing activities included dividend paid. Again, DDT is now gone, but any tax which is incidental to a buyback or a dividend needs to be presented as separately as a part of financing activities, right, in cash flow. Miscellaneous standards, corresponding amounts. So in the reports that the disclosures made by entities in respect of presenting comparative information in case of change in reporting period from calendar year to financial year is not adequate. So this company looks like it has changed its reporting period from calendar year to March. So the disclosures with respect to the comparative period is not adequate, and IND AS 1 requires specifically when you are using a longer or a shorter financial year. It happens when you have a transition from calendar year to a financial year or vice versa. You need to give a disclosure that it is a non-12 month period and why you have done that. So that adequately needs to be explained, and the fact that it is not comparable with last year, that needs to be brought out. Change in accounting policies. In certain cases it was observed that the notes to the financial statements mentioned that a change in accounting policy, that is a change in the method of inventory valuation. However, there was no further disclosures regarding the impact of such changes. So whenever there's a change in the accounting policy, you need to explain why did you change the policy. Secondly, and more importantly, if it's a voluntary change, which in most of the cases it's a voluntary change in accounting policy, unless it's coming by way of a transition to a new accounting standard, then in that case you need to also give a restated impact on the previous period, comparative period. So in this case you have not, so the company has not given those kind of disclosures, or it has not given a retrospective application of It was observed that organizations fail to give significant disclosures regarding comparative period in case of reclassification of items in the financial statements. Again, many a times we find that the companies just give a one-liner note saying that previous year's figures have been regrouped for the purpose of comparability, while it is fine as a kind of a safe disclosure, but what the FRRB is saying is what exactly you have regrouped needs to be explained. More elaboration is required. And by the way, if there is a reclassification, then there is a requirement under IND AS 1 to give a third balance sheet if it is having a material impact on the financials. So that needs to be, Percy. Many companies do still give SEBI. It is, yeah. Even SEBI LODR requires that if there is a regrouping, it needs to be explained. So ideally, it has. Yes, you are right. Yes. No, absolutely. Even SEBI LODR requires that you need to explain any restatement or reclassification. Many a times we are guilty of not giving it and giving just one innocent kind of a statement saying that previous has been a. But from a financial reporting perspective, technically it's not a correct one. You need to adequately explain, and as a matter of fact, if there is any regrouping, if there is no regrouping in the past, you should not have that disclosure, right? So, yeah. In certain cases, it was observed that the accounting policy disclosed in respect of borrowing costs states finance costs relating to the acquisition of property, plant and equipment are also included to the extent they relate to the period till such assets are ready for its intended use. So again, this note is not, it doesn't pass the muster of IND AS 23 requirements, where qualifying asset is defined as something which takes longer than 12 months, substantive period of time to complete. So this policy does not go to elaborate what is being capitalized, what kind of qualifying asset have you already identified, and how you have identified the substantial period of time. So again, this was something which was erroneous accounting policy. So with that, yeah. Yes, yes. So under IND AS there is no definition. Under AS, of course, there was a interpretation that it's 12 months. IND AS it can be shorter. So therefore, you're right. But the point here is that the way this policy is disclosed, it doesn't even talk about qualifying asset, etc. So it looks like everything has been capitalized, which is wrong. So with that, I would conclude the session. Of course, if you have any questions, etc., we can, take them. Yeah. Yeah. So again, this entire thing is available on the institute's website, FRRB observations on IND AS. If you Google, you will get this. So don't worry about this. I have not created anything specific. This is in public domain. So with that, I would like to conclude the session. Thank you for your active participation and your insightful questions. Thank you.
Thank you, sir, for the wonderful session, and formally I conclude a hearty vote of thanks to you for sparing your time and taking 2-3 hours to solve the query of people. Right now available, you can ask your query offline also. Thank you and have a great weekend.